We are comparing District 10 as well, Holland Drive and One Holland Village. One is of course a mixed use and one is just a government full-fledged residential development. In this instance, UOL has bidded this with Capital Land. We are seeing about 35% in differential in price point. So this is something to look out for. In District 16, Bayshore GLS, which is the first plot, we are right now using 2006, okay, as the reference here, to Backnel House, which is already done at $2,500 per square foot. And Bayshore is a bigger site, and of course is the first plot move in the government land sales program of the new township. And this itself is a 4% disparity, about $100 per square foot. In District 21, we have the Souza Avenue and Verdale. And the Souza Avenue, it's around 4% difference and $80 PSF difference as well. The opportunity is actually in the Souza side. In the Dairy Farm and the Hillhaven side, we've seen 2250 per square foot against 2002. In this instance, again, both are pretty similar. Again, the 12% marker is what you need to look out for. These are existing new launch and also upcoming new launch. So in this instance, Hillhaven may be the much more better bet. All right. And also in District 26 as well, Lentor Central against upcoming Parcel B. And both are basically up and coming. Existing Lentor Central is already 2,222. That's a $2,000 per square foot. This is a clear winner. You know where I'm coming from, right? And of course, the Canberra Crescent is also Water Gardens, which is a subsale against upcoming launch. And this is also an outright clear winner. You should know where it is because one is a subsale and one is a government land sale. So with this data, I want you to know that how come new launch are still selling even though it's all-time high. And I want you to know that these are actually monies that was recycled since 2024. In 2024, we see a very high price increase in subsale market. In fact, people who exited in 2024, we see an increment of people subselling as 8.46%. Comparing to the last cycle from 2019 to 2021, annually there was only 3.71% subsale happening, right? So short-term gains hide true cost. I want to share with you that not every short exit is really high appreciation or high returns. And what it means is there is a record of 1,306 transactions with a median of 385,000 profit. But this excludes stamp duties, legal fees, and that could be also some seller stamp duties involved for some who can't hold, and also brokerage fee as well when you exit the property. And we want you to watch out for supply tsunami happening from 2025 to 2028 because there are about 28,000 units that were TOP from 2023 to 2024 and they are flooding the market right now. So new launches demands today are mainly recycled profit from 2023 and 2024 subsale based on post and pre-COVID profits. So we then need to be strategically positioned when it comes to our exit. So development, so when it comes to investment, we talk about investment of development 700 units or greater, they will face pressure when sell during TOP. So the selling strategy where many people tell you that, hey, buy new launch, sell at TOP, sure make money, it doesn't really work because based on our in-house research, we realize that at least for clients that we are exiting for, those who bought properties bigger than 700 units in size, when they try to sell during TOP, they face a lot of competition during TOP. And typically units bigger than 700 units will take more than 3 years to complete anyway. So the strategy play here is to make sure that if you are buying the developments that are huge, bigger than 700 units is the denominator here, you want to make sure that you sell before TOP because naturally, given the development size, it will take more than 3 years to complete construction anyway, and that will mean that your 3-year seller stamp duty would have fulfilled. So the one thing you need to take note of for buying such mega development is to plan early by ensuring the bank loan that you took up gives you flexibility to sell before TOP without bank penalty. So we just checked that we're done for some of the clients back then as well that we projected such mega development. We took up rates from banks, even though it's not as favorable, but they give us the flexibility to sell before TOP and we are not subjected to the undisbursed loan penalty because for most of the bank letter or offer that you took, if you do not ask for such exemption or clause, typically they will just charge you based on the undisbursed amount until TOP. So before TOP, you still have another close to 40% undisbursed, right? So if you don't have this clause in place, you may be subjected to 40% penalty on 0.75% penalty rate. Okay, so this is really, really important. So while 99.3% of subsale owners celebrate profits since 2024, savvy investors are staying invested for 2028 opportunities. And why so? Because the master plan is updating this year. Okay, so debunking the myth. So ROCR is getting ridiculously more expensive right now. So should you just look at other regions to buy, right? That's what many people are thinking. In fact, some of them are saying that CCR is undervalued now. I want to share with you, is this really, really true? Let's debunk it together. So the price gap between regions, what's fueling the boom in the new condo demand? In fact, if you look before year 2025, the price gap held between the three regions for 3 years are pretty decent, but they are narrowing as we move closer towards 2025. So with price converging, is it time to really go into the core central region? Because it's the narrowest gap since 2013, more than a decade ago. Okay, so in order to save you from squinching your eyes, I've decided to get my team to basically enlarge it. And right now I want to let you know as well that median price, based on how you saw prices are right now in conflicting with each other in the rest of central region and also the outside central and also the core central region, we see PSF of CCR right now is 2,554, and right now it's lower than what RCR is doing, which is 2,716, and that's what causes panic. People can't understand what is going on. So to give you some context, this is how it looks like. So don't get overwhelmed again. I just want to let you know that I'll be leading you to guide you on with this data. Okay, so first thing, we look at what's on the left. This is what core central region prices are from first quarter 2022 to first quarter 2025. So there's a 3 years of data here. Okay, and you don't have to concentrate on RCR and OCR PSF here. We make it simple for you. Basically, just look at how core central region prices are facing in percentage in gap to the rest of central region and also the outside central region. And this is before 60% ABSD that was introduced to the market. So this is before first quarter 2023. You can see that in RCR gap between CCR typically is around 15% as a fair gauge. All right, 28.2 was an outlier in first quarter 2022. Okay, and in OCR typically it's about 30%. After the 60% ABSD was introduced from second quarter 2023, we see that the price for the gap between CCR and RCR maintained around the gap of, well, 15, and then suddenly it surged up to 30%. And for the OCR, we see it from 30 and even went up to 50%. Why? So there are basically lagging indicators here. And what we saw was there were launches that basically aimed to launch before the ABSD was introduced, but nonetheless, it happened. 60% ABSD was introduced. And ultra high transactions such as Skywaters and TMX and Maxwell were doing about 6,001 to 3,739. And we all know that the entire sales launch was a flop. Okay, there wasn't much transaction happen. So that was those one-off high transaction. In fact, there were also remaining launches that were selling a remaining unit from fourth quarter 2023, such as Climax Hill, Wharton House, and Midtown Bay, and 19 Nassim. They were going about 3,200 MPSF and higher. But what happens later on is actually a lagging indicator of what happens for those former on-block development. So in the RCR and OCR, right now, we see the gaps falling to single digit or even negative comparing to CCR. Okay, how so? So if you look at the fourth quarter 2024 and first quarter 2025, 60% of CCR launches are below $2,800 per square foot. So first was the relaunch of One Banana, where a huge discount was given up to 27% during this period of time. And the collective at One Sophia as well was selling about 2,700 PSF only. And there were OCR launches as well, such as Chuan Park. They were launched at $2,587 per square foot, and the Ori going at $2,007, as well as Parktown Residences too. And that's what brought the difference in gaps to single digit gain. The price gap and why? Because CCR has matured and there are less room for rapid gains. Prime central areas are already priced near ceiling levels, mainly due to scarcity. And foreign buying restriction, which is ABSD, and cautious investor sentiment have kept explosive growth in the CCR. OCR and RCR are seeing new launches at higher PSF, and that set new benchmark. So recent OCR and RCR project launch were acquired with higher land costs, but with stronger positioning like near MRT, lifestyle nodes, and schools too. Demand of new launches are mainly driven by recycled monies from 2023 and 2024 subsale profit as well. So those people who profited from it, they are just repeating their success in today's market in 2025. So government land sales program as well, we see GLS site release in OCR and RCR are commanding record land prices, setting a higher price baseline. Buyers still prefer fringe mid-tier for affordability and space, sustaining strong uptake. And 4, investors yield focus shift towards OCR and RCR. In OCR and RCR offers better rental yield due to the lower base prices compared to CCR entry prices as well. So capital preservation in CCR versus capital growth potential in RCR and OCR is influencing investors' strategy.